Hello, today is Saturday, November 30th, 2024. As always, we'll start with our disclaimer. We'll go over our calls, make our predictions. We also want to review how the new all-time high on Friday has influenced the longer-term picture. It's my trading plan for Monday, which is December 2, 2024. Remember, it's a plan. My plans can be wrong. My plans can change. All trades should be made at your own risk. Look for the pattern Friday with the early low. That's this. And Monday should have an early low and a late high. It has a bullish reputation, but the day in the cycle often has an irregular pattern. And if you just look at the one day on its own, you can't really assume it's going to be an up day. Doesn't mean it won't be, just isn't as reliable. Well, we said a few things. We said that the pattern on Wednesday's close was positive if it were maintained at the open, should lead to higher prices. Didn't make certain we'd close higher. Didn't say we wouldn't. So we got the higher prices. We said if we gapped and promptly undercut the low of day, that would kill the pattern. Well, that never happened. We said it would be hard to see how we could recover if we took out Wednesday's close, and we said gapping and taking out the high of day would do the trick for the bulls, which seemed unlikely to me. Well, we obviously didn't take out this close, and we have a rule that gapping sharply in the undesired direction kills the call. So as far as Friday was concerned, we weren't looking for the lower prices. But we also said that might not happen until Monday, and we have to see what happens Monday. These are the patterns I'm looking for next week. MEJT didn't give any real signals on Friday, but we did gap up, hit a high, higher highs, closed under midday highs. It's a negative pattern if it's maintained at the open. So if that's maintained at the open, we should trade lower, even if we don't close lower. And usually the last move on the Friday follows through. So usually you're going to follow through at Monday's open and trade lower. It's very bullish if we gap up instead, particularly if we gap up over this high, which is possible because that's a wall into the close, which often signifies action by the amateurs. The catch here is this drop came at a very significant resistance level, and stub days as a whole often represent action by the amateurs because a lot of the pros take the holiday weekend off. So this action can be reversed early by gapping over this high, but it's also plausible for the entire action on Friday to be reversed, and possibly very quickly. I think that'll be clear by the open which of those things happen. Now, I've never heard of a market hitting its all-time high on a Thanksgiving weekend and holding it, so regardless of what happens next week, we're going to trade higher than this before too long. But that doesn't mean we have to trade higher next week, and doesn't mean we have to trade higher Monday, and doesn't mean we can't have a pullback first. Well, this is the rising wedge. You can see we'll come right up to the apex. If this is going to have validity, we really should start dropping right from here. And if we just gap up and take this out, I think you should just forget the pattern, get your erasers out, and stop thinking about a correction. We're still in a long-term bull market, and if we can break through this, we should go higher. We just haven't broken through it yet, and if we stop from here, it doesn't change the long-term bullish picture. But as long as you take out some of these lows, you could have a sizable correction. That hasn't happened yet. I've redrawn this trend line to connect this low and this low. You can see we have great hits here, great hit here. We're right up to it. The rule is when you rally to a trend line in a straight line, you either gap over the line or the line wins. So we need to, if you're a bull, you need to gap over this trend line, which essentially means gapping over Friday's high to continue the rally. And if we don't, this resistance ought to hold. Now we had a good wave count for a top here. In order for to justify this going higher, you have to count wave C as an expanded flat. So we had a wave count for this A. You have to find some kind of wave count that works for magenta B, and then you have to start dropping from that count if it's an expanded flat. So let's look at this magenta B. We've already shown this a number of times. We had A, B, C ending here, as long as that high held for magenta B, with 5 waves up. You can now count this as an ABC, with C essentially equal to A, misses by a little. You can count 5 waves up with 5 equal to 1, and if that is blue C of magenta B, and you set it at 50%, you can see that A is right at 100. So C is exactly half of A, and there still is a valid count here. Now, that doesn't mean it's the only count. It doesn't mean it's the right count. It just means if we drop from here, you can explain it. So we have a trend line right here. We have a wave count right here. If we drop from here, you can explain it. And if we go up from here, we've broken through major resistance. We're going to have the mixed signals rules, and I think there's a very good chance we get a gap at Monday's open, which is going to clarify the whole picture. Monday's pattern has the early low and late high regardless of where we open, while the pattern has a reputation of being a bullish pattern. This day in a cycle often has an irregular pattern. The bullishness can't be assumed. Now the signals are mixed. It's bullish, there's a wall down into the close. It often represents panic selling by the amateurs, and if that's what it is, we should gap and promptly overtake Friday's high. The catch is stub days as a whole often represent trading by amateurs, making it plausible for the entire day's action to be undone, and that we're not going to know until Monday. What's negative is we gapped up, hit a higher high, and closed under intraday highs. The put-call ratio remains on a sell. There's a wave count compatible with the top. Timing indicator of a friend of mine hit a sell date Friday, the square of 9 from the 27 October 23 wave C low, hit a sell exactly today, Saturday, and the Carol Ann spiral calendar day hits a sell tomorrow, December 1st. And Friday's rally hit a significant trend line, a straight line move. So we have sentiment, wave count, trend line, time, all compatible with a top in this area. And what we don't have yet is for the market to start down. If we start down, there's considerable justification. And if we don't, we'll probably be off to the races on the upside, because when these things fail, they tend to fail in grand style. We're likely to gap smartly at Monday's open. If the rally is to continue, we should gap over the trend line we hit at Friday's high and maintain that gap. If we gap down instead, the elements are there for a significant pullback, which should be confirmed by maintaining a trade under recent daily lows. I mean, we have higher prices coming. If we take out these lows here, if we drop right from here, which is plausible, and take out these lows, we could go much lower than that. But that hasn't happened yet, and if we just keep on rallying here, I'm just going to have to get my eraser out. And I think there's no reason to jump the gun on this thing as far as I can see. The idea is, if this is a real thing, we're just going to probably gap down at the open, close this whole thing, take out these lows, take out this low, and if that's true, we have a ways down. We gap up here and keep on rallying, I'm just going to have to say we had a candidate that didn't work. So it's the pattern with the early low. I think The opening trade's going to be very significant. The odds favor a gap. And that's today's call.